Well, hello and welcome to the weekly update here on YouTube. So let's have a look at the overall market. Right now we have a bearish opening range, but we're still above the 21 EMA, which is showing some strength still, right? If we have a look at it from the perspective here, when we look at our stacked moving averages, we can see that yes, we've got a bearish opening range, but is that the only thing we look at to determine if the market's going up or down? No, of course not. Is it one of, say, 10 or so different indicators we use? Yes, right? So the bearish opening range is one thing. When we look at our stacked moving averages, 89, 55, 34, 21, and 8, all EMAs, exponential moving averages, based on Fibonacci numbers, you can see here that that's stacked bullishly, right? So that is actually bullish. The opening range is bearish. The stacked bullishly on the daily chart with the SPX. If we look here at the weekly chart, that's bullish above the 89. And we look at the monthly chart, that's stacked bullish as well. So, right, 1 bearish, 3 bullish. If we look at our combined or total put call ratio, right now, the 10-day moving average is 0.98. That is actually bullish, right? Looking for the markets to move higher based on that metric, right? One of about 10 that we use. If you look at the SPX, put call ratio 1.39, that's actually bearish. Okay, opening range bearish, SPX put call ratio bearish, SPX daily, weekly, monthly bullish, and obviously the combined put call ratio was bullish. We're about half right now. If we look here at the VIX, the fear gauge of the market, that's well below 20. There's a couple of ways of looking at this. Below 20 means it's, it is open to going much higher, right? Below 20 is fairly low. 17 is a pretty low fear gauge here. And a lot of people right now are greedy, not extreme fear, as extreme greed, should I say, but still just beyond neutral, a little bit greedy there as far as that goes. But this to me is more neutral. If it was at the lower Bollinger Band, I would say we're probably getting closer to being bearish, but right now that's pretty neutral, right? Nothing. So that's a neutral reading. Goldman Sachs, going back to our stacked moving averages on a daily chart, so goes Goldman Sachs, so goes the market. One of our indicators, that's bearish, right? The 89 on top, the 8 on the bottom, stacked in that sequence is bearish, right? So that's a bearish indicator. Transports can predict where the market's going to go several weeks to months in advance, and that is bearish as well. They're stacked bearish. So there's another couple of bearish signals. The risk appetite of the market, which is junk bonds, that's neutral, not really stacked bullishly or bearish, right? So that's actually neutral right now. High yield bonds, same thing, very neutral, not really telling us much there at all. So what I'm trying to say, by going through all of that, all of those key metrics that we look at to determine where the market's likely to go, right now we have about half bullish, half bearish, and several neutral. So what I'm trying to say is we don't have a clear indication or a clear setup, either the market looking very strong or looking very weak. Okay, so we've got to trade what we see, not what we think. And right now, the market's still holding the 21 EMA, still showing us we're in a neutral zone, not according to the opening range, but according to all the indicators that we look at. Right, we're sitting in about a neutral zone. Now, something like Bitcoin has moved down. It's broken that support zone. Remember the support zone I said between 27 and 27.5? We've broken that now to the downside. Where are we likely to go? Down to 25, right? So likely to go to 25. I think we'll find some support there and then probably move higher from there. That's what I'm thinking, but anything can happen. My job is not to try and predict or try and think I've got a crystal ball. That is just ridiculous to do that. So no one knows, right? But for me, the fact that now it's broken that level, 25 is the next support zone, and I think we could bounce off that, right, and move higher. But for me, that's what I'm looking at, right? So right now, that is somewhat bearish, and for me, I expect further downside to 25. Okay, so that's where we're situated there. So having said all of that, what are some of the positions that we're in? What are some of the things that we're looking at? Well, one of the ones we're in is Boston Scientific. Right now, we were down a little bit last week. Now we're in profit. We've got a 29% return, been in the trade for a couple of weeks now. Still like the position, so let's have a look at it. BSX. So still looking good. If we look at our stacked moving averages, still stacked bullishly, grinding higher. Got a 29% return right now. We're just continuing to hold at this point, right? We're holding that one. Microsoft was one we got into last week. We entered this spread for $1.70. It's now worth $1.33. Just continuing to hold. Let's have a look at the actual stock. From a daily perspective, still looking good, right? So no major problems. We're down a little bit on the position short term, means nothing, right? So continue to hold. Another position that you could look at long term. Now, this is not for next week, next month, 3 months, even 6 months. We're talking a year or longer with this position. So if you like long term positions that could potentially move much higher, Palantir is one of those. So let me give you some of the reasons why I'm looking at it. Well, let's look at the stock first. So you can see here we've had a nice move on good earnings, right? Good volume too, really good volume coming in. They're now profitable for the second quarter in a row, right? But this could very easily be a double top, couldn't it, right? We had a huge move up on earnings with good volume, ran into this pivot high, and we failed pretty much exactly at that level, about $10.31. We've now pulled back. Short term, we could pull back more. Long term, though, I think this stock could move much higher. Why do I say that? Let's have a look. These are some of the highlights from the recent earnings. Number one, second consecutive quarter of net income profitability. They've achieved operating profitability, accounting operating profitability for the first time in the company's history. Now, when you get a company that goes from being unprofitable to profitable at that switch, that's normally a great time to set up a long-term investment in the trade, right, or in the stock. So I like that. Cash from operations, 189 million. Revenue grew 18% year over year. US revenue grew 23%. US commercial revenue grew 26%. US commercial customer count grew 50%. Right, so there's some good metrics there. And as I said, they've now gone from being in an unprofitable position to having two consecutive quarters of profitability, only slightly, but the CEO has now declared from here on in we will be profitable, right? So that's a good sign, and this is where you want to get in. You don't want to get in once it's all known, once you see the incredible profitability in the company. It's normally too late by then, or you've missed the incredible opportunity to make a lot of money because you're waiting for too much certainty. A lot of people do huge amounts of analysis to try and create certainty where there really is none. But for me, this is a very good sign. Now, the other thing is it's got about 2.9 billion in cash or cash equivalents and no debt, zero debt. So I like that a lot. A company can expand further into projects. They can expand the business, and they've got no debt. So I love that. They've got about 950 million available in a credit facility, but they haven't used any of it. So no debt, increasing revenues, and 2.9 billion in cash, right? And the other thing to understand about Palantir is that they have invested heavily and are one of the leaders in artificial intelligence. Now, artificial intelligence, we know over the next several years and beyond, is going to explode. So this company could be well positioned to make a lot of money here. So what we're doing, taking a very long-term leap. Leap means an option that expires 12 months or more from now. We're buying a long-term leap on this stock. We're accepting the risk of the option that we're buying long-term, deep in the money, and we are looking for that to move higher long-term. Not next week, not the week after, not in a month, not in 3 months, long-term. Right? So that's the other thing. Now, a couple of other ones that I'm looking at that you might want to look at as well. Google recently is one that has had a nice move up. We can see here it's now broken out above this resistance zone. Remember, support and resistance are a zone, not a specific price. So that's moved up nicely. It's actually breaking out of a squeeze. So we've got a daily squeeze here where the Bollinger Bands are inside the Keltner channels. That broke out on Thursday. And this one is looking good. Now, I actually do something for my members called my intrinsic or real value calculation, where I spend a lot of time calculating the real value of a company, the minimum value, right, that it would be worth. Right now for Google, it's around $130.44. So we're actually undervalued right now where we are. And, if you look at something like Google, you have a look here. Good return on equity above 20%. The quarterly revenue growth and the quarterly earnings growth has been a little bit poor, which is why I think we're getting it at a discount. 115 billion in cash compared to under 30 billion in total debt. It's a fantastic amount of cash. I love that. Financials, we can see the revenue is growing very nicely, right? Very, very nice increase in revenue. Free cash flow, how much money they've got left over after paying their expenses, that's been growing very, very nicely. Dropped back a little bit last year, but I think you're going to see a big turnaround here with that moving forward. Now, as far as the growth rates going forward, always forward-looking, markets forward-looking, you should be forward-looking as well, over 17%. So that's very solid. So I think an undervalued company right now that over the long term, I think will do well. Where could it potentially move to? Where are we setting up our bullish trade on this one? Something that I think it could move, over the next 6 to 12 months at about back up to these prior highs of around 150, 151. Right, so that's what I'm looking for with Google. So looking to set up a position there as well. Another one that is not a position right now, but looking like it potentially could be, is ALB, right? So right now we've had a double bottom here, bounce there. We've got above the 21, first time in quite a while. Starting to break out of that downtrend that we've been in with this company. And I'm looking for a entry here soon, right? Not quite, but very, very soon. I think this is a company that could do very well. If we have a look here at some of the criteria here. Okay, so return on equity is fantastic. Look at that, 49%. Look at the quarterly revenues growth and the quarterly earnings growth. It's just fantastic. Something above 20% is great. But look at that. That's fantastic. Got quite a bit of debt though, right? About double the debt as what they have cash. So that's a downside. Institutions love them. Let's have a look at the financials. Revenue growth is fantastic. Look at that. It's incredible. Free cash flow, certainly big change. Wow. So yeah, this is definitely something that I'm looking at, looking to get into a position soon. Next 5 years growth rate, almost 48%. So this is definitely something that I like the look of. I'm looking to get into a long-term position with this shortly, right? So there's something else for you, right? Trying to add massive value to you all watching here on YouTube. So hope you guys enjoyed that, put a bit of time into that, and hope you guys got something out of it. The other thing I forgot to mention with Palantir long term is the fact that now that it's profitable and it's above 10 billion, this could be something that is around a 20 billion market cap company. This is something that could eventually be added to the S&P 500. Right? Maybe not straight away, but something that could be added to the S&P 500. Now, if you have a look at something like Salesforce in the same industry, right, same sort of area here, same sector, you can see that when CRM, Salesforce, got added to the Dow Jones Industrial Average, look at the move up here, 206 to 281, huge move. So something like that could happen with Palantir if it does get added to the S&P 500, because all of a sudden, once you get added to the index, you then open yourself up to huge amounts of institutional money, huge amounts of institutional investment, which sends the share price significantly higher. So that's another thing that could happen, not straight away, but longer term with Palantir as well. So there's some ideas. Hope you guys enjoyed that. I'll talk to you again next week. All the best, and bye for now.